Good evening, ladies and gentlemen. Welcome back to Mr. Rip channel. And tonight, for the second Thursday in a row, we are going to have a conversation in English language. So I ask you kindly to write comments in English if you want to be if you want to have a chance of asking your questions to our guest. Today's guest is another amazing person from Canada for the second time in 1 week and for the third time in 1 year, and it won't be the last one. We're going to visit Canada and we're going to interview the owner of the Plain Bagel, one of my favorite financial channel. So without further ado, I'm Mr. Rip, and let's introduce Richard Coffin. Hi, Richard. Nice to meet you. I just realized that I'm my nickname is Mr. RIP, which is not rest in peace, but it's retirement in progress. And you're Richard Coffin, so nobody like it makes sense.
Yeah.
Anyway,
that's great.
Thank you for being here. I'm a huge fan of your channel since forever, probably. I was following you, I think, before you even had like my subscribers. So
no kidding. Well, that's awesome. Thank you so much. I appreciate that.
Yeah. I love your channel. And can you please introduce yourself? So what do you actually do in your daily life? And
sure. Yeah. So as mentioned, I run the YouTube channel, The Plain Bagel. I actually also work a full-time job as now a portfolio manager. So I worked primarily when I first started the channel as an analyst, and now work as a portfolio manager where I actually help to manage people's money and provide financial advice on a registered basis here in Canada. So I've always had those two avenues where I post about general finance topics and economics. It's pretty broad what I'll talk about. But then my day job is actually giving, there's the not financial advice on YouTube and the financial advice in real life.
This is not financial advice. Yes.
Yeah. And thank you everyone for trying your hand at English, and I appreciate that from all the Italian viewers. I appreciate.
I push them to speak English all the time because my channel is about personal finance, a bit of investing, and also career development in tech. Because I'm a former Google engineer, so I try to push people to learn English, and it's a skill that they need to explore and improve. So I want to explore both of your sides, so your regular job and the Plain Bagel. I would like to start with what is actually a portfolio manager and what do you do in your daily job?
Sure. So portfolio manager can mean a bunch of different things depending on the company you work for. I had the pleasure of working for a pretty small company. We're about 7 or 8 people. So a very, very small operation. So a portfolio manager that at a 8-person company is going to be very different from a portfolio manager at a big bank or something along those lines, or a big investment fund. But in my situation, a portfolio manager within generally speaking, is someone who makes decisions for a portfolio. So quite literally manages the portfolio. So in my situation, that means managing the portfolio for individual clients. Whereas for a larger company, it might be managing an actual fund. So typically a portfolio manager in a larger context will refer to sort of the head decision maker for a fund. They're sort of the leader of that fund.
So non-customized, non-personalized, while you work with individual customers. So you do what's best for each individual client.
Yeah. So it's a bit more unique where there's not often a portfolio manager, or I guess most times you wouldn't think of a portfolio manager as being an advisor, but I'm in one of the unique situations where you do have that, where you do the portfolio management side, but you are also client facing. So I do have meetings with clients about the financial situation and things like that.
And last week I interviewed Cameron Passmore. You probably know WR Capital. I know I've seen a couple of videos on your channel with Ben Felix, for example. So I know that you are your management style is more active than them. So I want to just jump straight into this.
Sure.
when you manage portfolios for customers, for clients, do you do it passively, or you have an active component, and it's something that they are aware of, or how does it work?
Yeah, so there is definitely an active component. For smaller clients, though, we will typically use a more passive side of it. So we do have our business where we are paid as portfolio managers for the clients. When a client's a certain size, sometimes it makes more sense to use index funds and smaller options, because the one benefit of those types of funds is just the easy diversification. It's really hard to build a complete portfolio with someone who, say, has a few $1,000s or something. And so
Sure.
there's never been a hesitation to use those sorts of approaches. But it is definitely more active where we research individual stocks and do that fundamental analysis with companies. And I know, it's kind of funny because on my channel, I'll always talk about index investing and these sorts of approaches to investing. And there's sort of this dichotomy where I'll talk about that on the channel, and my professional work, I'll employ sort of this active management approach. And it's really just that on the index investing side, it's more broadly appropriate for a lot of people. And on the active side, we don't convince ourselves that we're going to be beating the S&P 500 or these things over a short period of time. It really just comes down to better risk understanding, where over volatile periods, there's a lot more we have that confidence in the companies that we invest in through periods of turmoil and things like that. So, it is a bit of a different approach. I'm very open. I'm very much an open book about that sort of dichotomy between the two. Again, it's not like I have convinced myself I'm the next Warren Buffett, but I really enjoy that side of it. Actually, it's one of the favorite parts, and why I keep working in the industry is I really like the analysis of stocks.
Well, you mentioned two different kinds of being portfolio manager, like managing a fund or managing individual portfolios. I think, I don't know, maybe you tell me if I'm wrong. If you are managing a fund, I think that you do active investing with a different approach. If you manage customers' portfolio, I see, I don't know, that they might benefit more from passive things, or
there's a bit more to do, and especially because to a degree, it's also cash flow management. So, we have clients who are retired, where you're deciding which individual positions to sell, the dividend yield for certain positions, which, we do take a total return basis, but dividends do help when it comes to an income standpoint for making things easier. So in Canada, we have what's called a RIF account, which is when you retire, your investments have to pull out a certain amount of money every so often. So it's that kind of, there's more of that micromanagement with an individual client than with a fund, where from a fund standpoint, you don't deal with any of that personal side of it.
There is Robert Gauss here asking if you can tell us something like the order of magnitude of asset under management. So, or I would also add, do you handle customers above a certain amount of money?
So the firm stated asset under management minimum is actually $500,000. So it's a lot of money. $500,000. That's Canadian, so a little bit less US, which I'm sure you're more familiar with the US dollar than the Canadian dollar, but Canadian dollar is about 1.3 US dollars. But the other way around. Canadian dollar is less valuable than the US dollar. But the state minimum is about $500,000. So within that, you obviously have that higher net worth client. And, there are some clients with very sizable portfolios.
Sure.
And that's also part of why I also really like doing the YouTube channel is, I really like helping people with their finances. And it's really difficult to offer that sort of service. It's not to say it's impossible, but it when it comes to the amount of time that takes, it's a lot harder to justify that service and not pay a larger, say, flat fee when dealing with smaller clients. That's why a lot of companies will have, especially when it's a smaller company where they can be selective. I'm not the one who set the minimum myself. But the reason they have that is because those clients just make more sense for them from a business standpoint to do all that work for. So the nice thing about the YouTube channel is I always thought as a way of extending sort of the coverage to smaller clients, because a lot of the people who are watching my channel, not to say they all are, but a lot of the time it's targeting first time or beginner or younger investors who might not have a massive nest egg ready to invest. So there's sort of that I get both sides of it, where on the one side, very wealthy clients, in many cases, a lot wealthier than I'll ever be. And on the other side, it's being able to share information with people who aren't in that same position.
That's amazing. That's amazing. I'm gonna torture you on your channel, asking everything. But I first want to close, understand your regular job.
Sure.
Can you tell us how? I mean, I don't know if you know how at least in Italy, the financial advisory situation is. It's pretty crappy. So people pay high fees to get access to active funds, which sucks. So I would like to know how is in your industry and how your company operates. Do you have a fee on top? How do you operate?
Yeah.
Do you have
So
a flat fee or percentage fee or?
Yeah, it's a percentage fee for my own company. It's funny. This is the most I've talked about my own employer, but I usually keep it separate, mostly out of the concern of I don't want to ever be marketing really the service.
Sure. I think
But
they're not even
very
available
happy
to Europeans. So
No, I'm very happy to
Oh,
chat about it. I find it
Yeah?
funny, but so we charge, it's a 1% fee, sort of is, I would think, the average. I don't actually have the number because it's a scaled system based on the amount of money.
Sure.
And because we're typically dealing with stocks, we will sometimes use ETFs, but because we're typically dealing with stocks, that's mostly the all-encompassing fee. There are some additional fees that might bring that up marginally, but that's sort of the baseline. But here in Canada, we do have a similar situation where, not to point fingers at the competition, because I do recognize that I'm also someone doing a similar job.
Sure.
But the finance industry does have a bad reputation here in Canada too, with high fees. Where if you are to walk into a bank as a starter, you're going to likely be put into a 2.5% mutual fund. And they'll say it comes with an advisor, but that advisor might call you once a year and is sort of a beginner.
It's a salesman. It's a salesman.
Yeah, exactly. There's a really big problem with sales, and there's been a crackdown recently in Canada. But yeah, they're same thing. There's, sometimes it's commission based and stuff like that. So it can really cause some problems from a trust standpoint.
Yeah. Okay. Thank you for that. Okay, let's jump on your channel. How was it born? How did the idea come up to you? Why are you doing this, and how is it going?
Sure, going very good. I'm very happy with it. In terms of how it started, it would have been in university. Well, sorry, shortly after university, I went to university for finance. And after I graduated, I was working for an investment company, a bit of a bigger one than where I currently work. And as my friends started their own careers, I had friends kind of in a large array of different fields. But as they started making money, I had a few of them come to me and ask, I'm making some money now. I don't really know. I know I should be investing, but I don't know what that means. Or, I need sort of a beginner pitch on what investing is. So I would do this thing where I sort of had this presentation ready. It was a 1 or 2 hour sort of elevator pitch, where we'd go to a pub and grab a pint each and talk for the next 2 hours or so. And I would just
elevator pitch. It's like
and I would just
elevator to
a long elevator,
pitch,
but yeah, exactly. But I would sort of lay out all the details, and it would cover everything from what is a stock, why does it make money, why might it go up in value, what's the risk, what's a mutual fund, what's an ETF, what's an advisor, do you need one, like what are the things to consider. And none of it was ever to really recommend anything, because at that time I wasn't registered either as an advisor.
Okay.
I am now actually here in Canada, but at the time I wasn't. So I was very cautious with that. I didn't want to suggest a certain course of action, but it was really to lay out the options to say, if you want to go buy it at it yourself, these are some options here. If you want an advisor, here's some options here and things to look for. And if you want a middle ground, here are all the in-between options that you might not hear about, like things like robo-advisors, which I think I don't know if Italy would have many of those, but here in Canada, we had a good push for robo-advisors.
That's another topic I would like to discuss a bit. Maybe while we're at it,
Sure.
in Italy. I mean, I'm in Switzerland. In Switzerland, there is some robot advisor, but people don't use them. In Italy, there is a couple of them. They're not very cheap. They may cost you
Okay.
even more than 1%, which is crazy.
Oh, really?
In my
Okay.
opinion. Yeah. Yeah, it scales pretty good with a very high amount of asset under management, but
Right.
for regular people, they're not cheap. But I thought, I mean, I'm a software engineer. I said, okay, yeah, with RoboAdvisor, we solved the investment. So now everybody's gonna join RoboAdvisor industry, and at a point the prices will go down, and it's done. Okay, we got rid of financial advisor. It didn't happen. I recently read an article from Josh Brown. I don't know if you know the Riddle's
Not
Wealth
familiar, no.
Management. Yeah, about wealthy people don't talk to robots. So people, they want to talk to human. They want to have extra services on top. It's not just the portfolio management, but people have wealthy people have a complex life, a lot of things happening. So apparently, robot advisors in Italy, or I mean, everywhere, they didn't take off. Actually, do you have a different situation in Canada?
No, I think it's similar where, especially when they first came out, there was definitely this perception that, well, that's it for the advisors. Like, we have the next iteration of the financial advisor, and it never really happened. And there was this big push, and I used to use one where for a while I had all my money managed for free effectively because they had all these promotions. Like, they were sort of like when Uber came out in North America anyway, they had all these promotions.
Yeah, you got coupons and
yeah,
for
exactly.
a discount for yeah.
Yeah, you could have free rides and stuff like that all the time. So I had my money managed for free for some time with a robo-advisor. So that was great. These days, they cost about 50 basis points. So about half of a percentage point in Canada.
Not bad.
Not as bad, yeah, for sure. So
in US, there is
viable
Betterment, and there are a couple of in US which goes down to 0.25, I think.
Yeah, they definitely are getting cheaper. And it makes sense. Like, they're not very complicated algorithms. It's effectively just passive investing with a bit more hand holding. But I think I've always highlighted it as a good option for people who don't quite want an advisor, but just have a bit more hesitation managing it themselves and don't want to be on top of their portfolio in terms of redistributing and reallocating and rebalancing their portfolio. So I've always, especially when it's cheaper in Canada, it's not as cheap as it used to be because it's sort of matured a little bit. But at the time, like, you could have a lot of, especially if you're a smaller account, you could get like your first $5,000 managed for free. And there were all these promotions at the time.
Yeah, but then in the end, like Vanguard or other companies, they built it in a single ETF. Like, you have life strategies or target date fund. There are like single portfolio ETFs. So at one point, the competition is pretty tough. Yeah,
that's a good point. Yeah, and I think there's that question of unnecessary diversification or redundancy where you hold two ETFs that have the same position, if that's really necessary. But I did find, especially as I've worked in the industry, I have noticed that especially larger clients really do want to have a point of contact because some complicated stuff just comes up every now and then. You have a client who's trying to move money from the US to Canada, keeping it within a registered account, meaning that they're trying to avoid realizing capital gains for tax purposes. So weird things like that come up every now and then, where especially larger clients, there is still that demand for the human side of it because there are problems that will come up that are just not necessarily easy to know the answer to right away, that an advisor will have more information on. But for most people starting off, especially, if you're walking into a bank branch to get started investing, I've always said, you can get ahead investing. And then once you get to a point where you have a question, then you can always engage an advisor. There are safe strategies to investing where you don't necessarily, and I say that as an advisor myself, like I am very fortunate where the company I work for is very low pressure in terms of, there's no quotas, no commission, no real push to drive any sort of growth, and very My
Okay.
boss is actually very quiet and very humble guy. And the
Looks
first thing
like
he said to
a
me,
family-owned business, something like this.
yeah, yeah, well, yeah, it's just a small partnership, and like the first thing he said to me when I got hired was, our first priority is doing a good job for our clients, and that really stuck with me ever since because it's just that old-fashioned sort of commitment.
That's amazing.
To business.
That's amazing.
Yeah, which is incredibly rare in Canada too, especially with finances. Most jobs of my caliber are very heavy sales focused. So it's kind of part of the
Wow.
reason I've kept the job where, I have the YouTube where I could look to do that full time if I wanted to, but
That's
I
gonna
really
be one
lucked out with
question, I'm gonna ask
right.
you this.
No worries. Anyway, but I'm very happy with where I ended up. So I like the work I do, and that's why I do the two at the same time.
Okay. So your channel was born to answer the questions you were receiving from people who know you were working in the industry. So, hey, can you tell me something? Can you teach me something? And then it started as an educational project.
Yeah, and that's a good way to describe it. It was I'd done that a few times, and then I'd always actually had a hobby of doing video editing growing up. Nothing to this caliber, but just for fun, making videos with friends. And I thought, well, that'd be a fun side project. I'd actually just recently finished my CFA exams, which for anyone unfamiliar, it's a really crazy exam you have to take to get your CFA
For
designation.
3 years, the 3 years,
three levels, yeah, 3 levels.
3 levels.
I think I did it over a year and a half, I think, or 2 years.
Wow.
Yeah,
Wow.
I really cramped.
Congrats.
Thank
Congrats.
you.
I thought you can only skip 6 months because you can start and do the exam the same day. But then, wow, okay. Congrats.
Yeah, so it was thank you. Yeah, it was definitely a push through. But I did that, and once I finished it, I was sort of looking for something I could do in the meantime to keep the sort of productivity going, to make sure that
I can
didn't lose the momentum I was using the studying time for, because I was studying over an hour a day for quite some time. So yeah, it was kind of that led to this project of making a 10 video series that ended up doing well. So I kept going, and I guess the rest is history. Yeah.
It's amazing. Like Pietro is asking, what's the reason behind the name of your channel? Where does the Plain Bagel come from?
Yeah. So funny, during my time at university, I had one course on, I think it was business law. And the professor was someone who made up idioms all the time, in the sense that he would make up sayings that weren't really a thing, but sounded like they made sense. And one of the things he had said at one point was, if you can't afford the cream cheese, get the plain bagel. And I didn't think anything of it at the time, but when I was looking to make a channel name, it kind of stood out to me as like a good saying about frugality and
frugality.
If you don't,
but you don't talk much about spending on your channel, like frugality.
I don't. Yeah, I don't talk a lot about the topic of spending. I wasn't sure where the channel was going to go when I first named it. So I thought, maybe I'll go into more budgeting side of things, because I was very involved with my own budgeting and stuff like that. But just as I developed my career, I became more skilled, I guess, or I developed more of that expertise on the investing side. So that's kind of where the channel went. But yeah, I did actually develop from sort of a frugality standpoint. I didn't want to name myself, finance king or something too literal. I was of the impression that if you do good content, the name doesn't really matter. You can kind of make anything stick.
Yeah, I agree. So if somebody jumps on your channel and discover your channel, is there something like an entry point? Do you have some like playlist of basic things, of introductory things?
Yeah, I have one of the oldest playlists is the Plain Bagel Basics, and it is my lowest quality videos in terms of, so right there. Lowest quality in the sense that I didn't know what I was doing with the camera yet, was still developing my presentation skills, wore a suit that was a little too big for me, like all that kind of stuff. but that was kind of the initial project, was making these episodes, and they include some animations and stuff. I actually tried my hand at animating some of the scenes and things like that to display examples. And they covered the very, very basics of investing. From there, it sort of developed to covering events that happened, other topics that would come up. But those are sort of the core, I guess. I've actually really wanted to redo them. It's just about finding the time to do it, just because, I look back at it, I have a hard time watching them, knowing how far I've come, and looking at older videos I find very difficult.
Same. My most popular video on my channel is one that I did a couple of years ago. It's called Personal Finance from Zero to Hero. Right. And if I watch it again, like, I die of cringe, because it's really like low production quality. But so I tell myself I should redo it. I should do it better. But new things keep happening, new projects, and it's complicated.
Yeah, so, well, that's it. Yeah, I agree.
Yeah. So the channel is doing great, apparently. So you are 870,000 subscribers. Congrats.
Thank you.
What's your plan with it? I mean, where do you want to go with the channel?
Good question. I've always...
I see that you touched several topics. You started several series, like, I don't know, reacting to TikTokers, financial, or explaining movies, or the history of, like, financial crash or other things. Do you have a big plan, or you keep going where you want to go?
Yeah, it's definitely the latter. I don't. YouTube's always been a weird hobby turned business that I haven't been prepared for the business side of it. I am very fortunate to have the channel be as big as it is, but it hasn't been through active business planning. And so it's really hard for me to look at the channel and be, especially with the full-time job where I do have a lot of commitments over there. It's hard to look at it and be a strategist with, well, where am I going to take the channel and stuff? It's not to say I ignore those things, but I've kind of just covered topics that I want to. And it's done well for the channel. And I have a bit of a sense that I've developed over time of what might do well, what won't do well. But to an extent, I kind of just balance the two, where I'll cover topics that I think will do well, but I also just cover topics that I want to. And I think if you have passion about something, and if you cover a topic you're interested in, I think over time it shows in the content. I think people recognize that. So no real plan outside of, I'd really like to do more. I like the reacting videos, but I'd like to do more of the educational side of things. It's really how the channel started. And I enjoy covering the news, and I think there'll always be an opportunity to cover important stories that come up. But there's really no goal of becoming a news channel. I've done quite a few videos recently about big news items, but I just don't see as much value in that space from a fundamental standpoint. As an investor, it's important to keep an eye on things, but you shouldn't really be worrying about the everyday headlines that come up. So I have that sort of conflict of, well, I don't want to make noise out of something that I don't think ultimately matters. So there is sort of that objective of covering more educational stuff, but I like reacting to movies, and I like reacting to videos I see online. So there'll always be a bit of that, I think.
Yeah, I also have the same struggle, because sometimes I want to do something more structured, like thinking of a syllabus of an eventual course or something. Right. But then you start chasing what's hot, what clicks more. So I think sometimes it makes sense to put gasoline on the fuel. So to say, maybe I will reach more people will join my channel, and then maybe it will have more impact with when I will do real educational content. But then, the algorithm asks you something different, do the same kind of video. So it's a bit of a fight. Do you never used your channel to advertise other aspects of your business? So they're completely separated.
Yeah. So I'm very. I my company's definitely brought up the possibility before, but the issue with it is that, I think the biggest asset that you and I have is the trust we have with our audience. And I think
Sure.
a lot of that stems from monetary incentives. So, I believe in what I do with the company. I like what I do. I have the option where if I didn't like what I did, I could easily do YouTube full time, but I do like it. But at the same time, I don't think people who watch my videos want to get an advertisement for a wealth management service.
Sure. But
So there's
aren't
that
there
hesitation.
many people who ask you privately, hey, I still need a financial advisor. I love your content. I trust you. Can I ask your company to manage my money? Even if you're, I mean, that's a missed opportunity for,
Yeah,
for
it
your
certainly is
business.
an opportunity. I have, it's not to deny, I've had a few people reach out and ask about that, but probably a lot less than people would expect, like less than I can
Okay.
count on one hand. So,
Okay.
yeah, it's
I
really
would
not
have
an
expected.
advertised service. Yeah. And it's, I think the information's there if people really feel the need to reach out for it, where, if they really were like, oh, I need an advisor and Richard's the only one for me.
Yeah, sure.
They can find that out if they need to, but I don't feel the need to bring it up. And I really do value that trust side of it.
Well, I receive on a daily basis people reaching me out to ask me, hey, do you? I'm not a financial advisor. I'm not a certified financial advisor. I'm also like a self-taught person in the financial industry, so I'm not qualified. People ask me frequently, hey, do you have somebody who you trust that you can recommend to me? Like on a daily basis. So I don't have one. So sometimes I had to push back. But if I had a business, probably I would have said, "Hey guys, come here." I'm not actively pushing ads on my business in my channel, but if I happen to have, anyway, yeah, good for you. Like PWL Capital they have a business. All their channels are connected to the business, but they don't even push that hard. So. I don't think
and I've always found
there's
that interesting
anything.
because,
Yeah.
it's I really like Ben Felix's content and the podcasts they have, and so it's absolutely not criticism of it, but I have found it interesting because I do think it's primarily a company run channel, and they don't advertise for their service, and you know what, I
Yeah.
still think people
They
appreciate
grew a
that.
lot. They grew a lot after they started doing like online content. Yeah. Anyway, so do you ever think about going all in with YouTube? I mean, yes, your boss is not listening now. I mean, do you ever like thought this might be in future an option, and what's preventing you to do that?
I've definitely
Part your
thought
amazing
about it.
job.
Yeah, I definitely thought about it. I think so the short answer is in the near term, there's no plan to do it full time. In the long term, things could always change. I am pretty busy with the two of them, and I might not always appreciate being that busy. But right now, or at least for as long as the channel's been around, there's been a really good relationship between the two, where a lot of my experience for my videos really comes directly from the work I do, and some of the information I come across and the analysis is thanks to the work I do. And quite frankly, I have coworkers who are much more experienced than myself, much more educated in some cases than myself. And so having those resources available to me is really hard to replicate by myself, just being a YouTuber out in the universe. So there's that side of it where it actually helps the channel. And, even from a branding standpoint, I think it helps to be able to say, I work in the industry, and to get that experience directly helps a lot. So that's, I think, been a really big factor for my channel's growth. And I think it's been a part
It
of the
brings
channel.
credibility, authenticity. So sure, you are
Yeah.
not just talking about stuff, but you do stuff and then talk about stuff. Yeah.
Yeah. And to your point earlier about the algorithm, like I really hate playing the algorithm. So I like having, YouTube makes me money, and it makes me a good amount of money. So I'm very lucky and fortunate with that. But it's nice not having my bills rely on those payments. Whereas I think if I were doing YouTube full time, whereas I don't have this full time job, there might be more of that incentive to do a bit more of a clickbaity video or, more of that sensationalist stuff. So it helps on that side too quite a bit. Again, things could always change. It does appeal to me, the idea of doing the same amount of work without a full-time job and freeing up a bunch of time and making, I could probably make a lot more money if I went full YouTube.
Sure.
But it's it's a weird thing where I think it's helped me quite a bit to get to where I am. And so I'm not really overly enthusiastic about the idea of dropping all that work.
On YouTube, you don't do much. I don't remember. I mean, how hard you go with sponsorship, but I don't think you do much. I don't remember.
I've done them. It's
in the
it comes
past
and
a
goes,
bit more. Yes, because I also have some sponsor block. Oops, so sorry. But so you mean just by Google AdSense, you get like quite a good amount of money. Can you tell us roughly what percentage of your income comes from YouTube and what from your regular job, or I'm asking too much?
Like I won't share a dollar amount, but I would say it's close to sort of half and half, where I make sort of a similar amount from my day job as I do from YouTube. And I do think that a lot of the sorry, I'm having a technical issue on my end. I think the issue with okay, sorry.
What's happening?
I was cutting out on my own end. The thing with the YouTube is I could really I'm well aware that I'm leaving a lot of money on the table with a lot of options. So I do think that if I were to do YouTube full time, I think there'd be an option to make more money than I do for my day job. But because I leave a lot of, none of the sponsors, for example, are finance related. So because of that, the ad rates, I guess, aren't as good as they are for, say, a newsletter, which is a really popular option I go with. So yeah, I think there's the option where I could have made more money from YouTube, but I'm, earning a second salary is certainly more than enough for me.
Yeah, totally. I want to take just a quick question from the audience. Nandai asks, how do you manage to find time for both YouTube and your job and your kids that I can hear somewhere in
you can? Yeah, sorry. I think they came home from daycare and they're having a bad time.
I can empathize. I have like 3 daughters. So.
Oh, okay. Gotcha. Yeah, they're 1 and 3 years old. So they're right at a screaming age.
Yeah, mine 5, 2, and 2 are twins.
Right. Okay. So the question was about in terms of both
time management.
So I only post once every 2 weeks on YouTube, and a big reason for that is, like I mentioned, I started doing YouTube after finishing the CFA to try and keep that momentum going of being productive. I used to study for my CFA on my lunch breaks. So I would have about an hour a day on my lunch to study for the CFA.
Wow.
And that's, well, over a period of time.
Okay.
So YouTube, I've been able to sustain it more or less on an hour or 2 a day. So over lunch breaks, I use every lunch break to work on YouTube. And sometimes over the weekends a little bit, especially when there's more research involved. There is a bit more time that will stretch into it. But that's part of the reason I'm able to do both, is I don't post as actively as some others. And especially
once every 2 weeks, more or less.
Yeah, once every 2 weeks, roughly. And as I've gotten busier with kids, and that was the biggest change, actually, I've pulled back the level of editing I do, where the first few videos were very intensive on animations, special effects, and all that stuff. And they've really evolved into more talking head videos where I'm just talking to the camera, the video's cropped, and I show what I'm talking about. And thankfully, the audience has been very receptive to that. So that's how I'm able to manage to, is I have had to pull a bit of time away from YouTube as I've gotten busier, mostly with the amount of time I spend editing. And I think I'd like to hire an editor at some point where I get more
I
time
was
to do
going
more
to
research
ask
and
that.
stuff.
I mean, you still do everything on your own?
I do. Yeah. I like it. I really do. Like I mean it when I say that.
Okay.
I still view YouTube as a hobby. Which is also part of why I'm able to do it. Is it doesn't feel like the
Show
kind of
some
work.
respect. It's paying as much as your current job. So.
Yeah, that's true. That's true. Yeah, it's not to downplay that, but I enjoy it. I really do. So it gives me that motivation to do it.
Yeah. Okay. So you still do everything on your own, but apparently at one point there was this Craig helping you, collaborating with you.
Yes. Yeah. So my good friend Craig, actually, me and him are really close. He kind of looks a little bit like me, funny enough. So it can be confusing at times, but he doesn't quite help as much with the channel anymore. He's gotten busier with his own job. He's actually a journalist for a pretty well-respected news organization here in Canada. So I tried to flex that a little bit when he was helping me, and he actually helped write, I believe, just one of my videos. And it went relatively well. He did a good job with it. And he used to help me with the filming. So he used to stand behind the camera, which is why I would call him cameraman Craig in my older videos. And so he would help with that kind of stuff. But as he got busier, he sort of stepped away from the channel, and I got better at what I was doing where I could do it myself. I got a remote control for my camera, so I could monitor myself and start the camera myself and things like that. So right now I'm currently a one-man army, hoping to, there are times I have an editor, Carol, who I send some videos to, especially when I'm falling behind. My goal is to give her more work and maybe even hire a second editor to help with other types of stuff.
Graphics and
but for the most part, I do the average video is primarily done just by me.
Okay. Wow, that's impressive. That's a lot of stuff.
Thank you.
I don't know how. Personally, I think I'm no more a one-man show. I have people who help me, both in organization and editing. Of course, I did maybe just 3 years ago. Then I soon hired an editor. But I think I'm plateauing the audience. What suggestion do you have for a YouTuber in your field to try to expand their audience, to reach more people?
That's tough because I don't really know. My own experience has been definitely that, we talk about the algorithm and stuff. I do think YouTube likes videos that are very recent. So, I notice where if I post a video about a current headline or something, it tends to do really well up front and brings in a lot more subscribers right away. Versus the more evergreen content of how to increase your salary or how to save more money or those types of things. It's not to say there's not demand for those videos, but the more sort of niche and educational it is, the less likely it is for the algorithm to really pick it up.
Which is a really bad thing, because
it is.
I mean, either you water down your quality. I mean, your intellectual quality of the content, then you reach more people. But it's like TV rules. Like if you do like a regular show, you get 10 million viewers. But if you do something like linear algebra, you get 10 people watching you. So it's it's a bit of a pity.
It is.
I really want to. My mission is trying to educate people to be to lower to increase the signal to noise ratio as much as possible.
Yeah, and well, that's it. It is really unfortunate because you're incentivized to do the content that doesn't matter as much, and the really important stuff sort of falls to the bottom. So again, kind of part of why I like working full time is I don't feel as pressured to always do that. I'll do some of it sometimes where, I'm very aware of growth, and the 1 million subscriber mark is right there. I would love to be able to grab it.
When will you reach it? According to forecasts.
Could be late this year, early next year, based on current trends, but it really fluctuates. Like it really does. Sometimes you have a video that takes off and does really well. And then sometimes you have months where I've been convinced, that looks like the end of it. I guess I'll be doing my full-time job again. So it really
Okay.
does fluctuate.
So I have 125. So guys, if everybody on my channel go and subscribe to Richard's channel, we
There you
reach
go.
1 million. I'll give you my
Yeah, we'll be very close.
12.5% of shares I will
Great.
get.
Yeah, there you go.
Anyway, let's jump directly into your top content. I know you
Sure.
launched an NFT collection
Yes.
a couple of years ago. Exactly.
That's right.
It was almost a couple of years. It was 1st of April, if I remember correctly.
Hi there. My name's Francis.
Yeah, that's right. Yeah,
I love
exactly.
this video. It's about the Us Bagels NFTs. It was like a very nice time for crypto.
That's right.
I will use this just to ask you. I don't want to see the collection. See the Us Bagel.
Yeah, there's a few of them. Yeah.
Top. I want to use this just to jump on another topic, which is like telling a bit more about finance. And what's your take on crypto?
Yeah, I mean, it's a hot button issue again. Obviously, crypto's done very well this year. You know, there's sort of, I can share my opinion, and you know, I'm very aware there's no predicting where these things will go. You know, anyone who tells you that Bitcoin or whatever is certainly going to hit 1 million is really just guessing at this point. But I apply that to myself too. Like, I can't predict if it's going to go to 0 or if it's going to go half the price of what it is. And I think a big part of that is a lot of it is based on investor behavior, which is just incredibly difficult to predict in the short term. My own view of it is, you know, I still view it as a speculative asset.
Mm-hmm.
And people really don't, you know, some people get very defensive when they hear cryptocurrency being called speculative, but really all that means is there's not an underlying business or underlying thing that is
Profits.
being used to calculate the value. Exactly. Profits or something like that. So when you have
there is a narrative right now, people saying the value is the energy consumed, but then, I mean,
yeah, no,
how can a cost be an underlying value?
Like, so yeah, people are mixing up the cost of something as the value of something, and cost plays a role, but it doesn't explain the demand side of the function. So you have to keep that in mind is there's supply and there's demand. There's a lot of arguments on the supply side, but that doesn't necessarily give you the demand or forecast the demand based on what supply does. Yes, supply might be finite, but so is the number of Toy Story VHS tapes out there. So, you know, it's all to say that as a speculative asset, you really have to be careful because you're just guessing what people will want to buy a year from now or 2 years from now. And that's a really hard thing to do. It's the same with collectibles, you know, on the topic of
Sure.
NFTs. There's really no guessing what behaviors will be 2 years from now. People might say, people value Bitcoin today because it's finite, and people in future generations will look back and see how valuable Bitcoin is and wish that they had gotten one. It's like, well, how do we know? You know, it's such a difficult thing to predict. So I don't delude myself into thinking that I know where it's going to go. But you do have to treat it differently than you do stocks. That's really the end of it. If you want to allocate some money to it, you just have to be aware that there's risk there. It's still panning itself out. And because of that, you have to be very careful. You have to limit how much of your life
Exposure.
savings you're putting on the line with it. Yeah, exactly.
Yeah, makes sense. Yeah, I mean, it's a topic that will like on my channel right now, and always when we are during a bull run, nobody shows up telling the benefits of Bitcoin when it's at the bottom. It's always when it's already done like 5x from the bottom.
Yeah, well, that's it.
Okay, let's go back to financial markets. Do you think that why shouldn't the average Joe try to beat the market?
Well, there's a number of reasons. One of the best ones being, quite frankly, that a lot of research shows that active funds don't outperform. You know, there's the Spiva, I think is the name of the survey done by S&P. Yeah. They compare the performance of funds to the S&P, and something like 80% of them underperform just the S&P 500.
I will stop you there because I also have some I'm in a personal battle against the Italian active fund manager that try to push their crappy fund at 3% regarding costs, and they say but Standard and Poor is not impartial here because they produce indexes. So the SPIVA research it's motivated by interest. It's not pure. There's also a Morningstar research, which is a bit more. It's a bit kinder toward active investing. Still shows how it on average underperforms, but it's less brutal than SPIVA.
Yeah, and I think there's Dalbar studies are another one. That might be a Canadian one, but there are plenty of studies that show it. There's not many studies that will show that active funds outperform. So, sure, conflict of interest is important, but you can cross-check it with other research done on the topic. So that's one side of it. It's just generally speaking, it is very difficult to beat the index, even if you are a professional. The other aspect of it is most people aren't professionals. So I think there's always a lot of interest in researching and buying individual stocks, especially when you have 2021 with or 2020 with Tesla taking off. You have Bitcoin, you have individual companies skyrocketing very quickly. That brings in a lot of people, and a lot of people convince themselves that stock analysis is easy.
Sure, always same insight.
Yeah, but it really isn't. Outside of the fact that it's very difficult to beat the market, to do a good job analyzing a stock takes a really long time, and it takes a lot of technical expertise. One of the easiest examples I think of is reading an accounting statement. If I were to ask, 9 of the 10 people I know who talked about the individual stocks they buy to me personally, if they could explain an accounting statement to me, they wouldn't be able to because they don't have that accounting background. Okay. And that's just one area, for example, where
even among professionals who
among friends who say have a brokerage account. Yeah, sorry. Okay. Among professionals, most of them do know. That'd be very concerning. Yeah. But that's a technical skill, right? And it takes training, it takes education to learn accounting. It's not something you can feel your way around. You really have to learn the rules of accounting. And so my rule of thumb is, if you don't have a passion for stock research, and if you don't have that education where you understand things like depreciation, you understand free cash flow, you understand even how discounted cash flow model works. Not to say you necessarily have to do that because that's just one style, but there's a lot to it. And if you don't understand some of the basic building blocks like accounting statements, then you're kind of going in blind. It's not to say you can't play your hand at stocks if you don't want to, or if you want to, but
it's based on opinion and not on facts. Yeah,
exactly. Yeah, you're not really doing stock analysis. You're kind of just gambling with how you feel about a given company, which is I do think a lot of people take that approach.
Yeah, in Italy, there is an overwhelming amount of traders more than value investors. I have a lot of respect for value investors. I still think that's something that I one day might be interested in, trying to put a value on top of a company and then to check the price and then decide if the price is lower or higher. But nowadays, I think 95% of active investors are more traders. So those who look at charts and try to predict based on technical analysis. Do you have any opinion on that, or any experience? I'm very brutal against them. I say, okay, if you want to sell me a course or telling me that you can predict movement and realize 10% per month or this kind of promises, I'm pretty like.
Yeah, I think, so professionally, very little weight put onto technical trading. There might be a very small consideration after we've done the research. If we like a company, we might give a very, very small consideration to technical indicators. But even then, it's not charts. It's really just based on volume or, very subjective things that we acknowledge don't have a whole lot of backing. So it really is a very, very small piece of our overall thing. And I think if you do find professional technical traders, they're very blunt in saying, it's not beating the market. It's because you will have traders who are, say, hired by a bank or financial institution who takes market information and uses that to try and get a better price for a stock. But it's not usually the driver of returns. It's usually just to find the entry point and the exit for a stock that you already know you want to buy or sell.
Okay.
So professionally, that's how a lot of people implement it professionally, is sort of as a minor point for determining the entry and exit point for a stock you already know you want to buy or sell.
Okay.
Not for determining which stocks you want to buy and sell.
Okay. Good point.
I think the problem with a lot of social media technical analysis is they exaggerate what it can do. There's very little research to support that technical analysis even works. And B, they exaggerate the payoff and the return you can achieve by doing it, which just doesn't make any sense. Again, there's no real support for it.
I want to address this complaint of Orfeo. I don't think that knowing basic financial and accounting concepts give you any real advantages when it comes to beating the market, which I probably agree.
I agree with that. I mean, I think it's not to say that it gives you an advantage, but I think it's to say it's a bare minimum for analyzing stocks. So, if you view stocks as throwing a dart on a board and gambling, then sure, then you are gambling, and then that's the approach you're taking. But if you're trying to understand a company and you want to buy a stock because you like the business, then you should know how to understand how much money the business is making and the different functions of it. I do agree that just researching accounting statements isn't a proven method for beating the market, especially because when you talk about quantitative strategies where you take numbers and try to use an algorithm to determine whether to buy or sell, that is the first thing that all these companies will do is use accounting statements, because it's numbers, it's easy to process.
Sure.
So any profit from that is already arbitraged out of the market because you've already had all these firms. That's the first thing they went for, was accounting-based research. So first, I agree. It's not to say that accounting analysis will beat the market, but it is to say I see it as sort of a price of entry if you want to analyze stocks.
I mean, it's a required condition, not sufficient, but you need to know, I mean, how to read financial statement and do this. Yeah. There is recently in my community, there has been a lot of discussion about what actually is passive investing. So do you think it refers to the investor behavior, to the instrument, or to what? For example, if I buy and hold for 30 years Tesla stocks leverage 100x, just to make an example, is that a passive strategy or not? Or if I do daily rebalancing among 10 index funds according to some strategy, but I only use index funds, is it passive or not? What do you think defines passive investing?
That's a good question. And I think it touches on the idea that, defining passive investing as one single approach is really difficult. And I think you're right. I kind of see it. I used to say it looks like a spectrum between active investing.
It's multidimensional. So
yeah, it's more like a matrix, really, where you have all these different avenues, like you mentioned, this trading strategy, the instrument use, the country diversification, all that kind of stuff. And so, but on the basic, so all to say that I think both of those would fall somewhere in that matrix, but one's not, say, passive and one's not, say, only active. I think it really is, most strategies fall in between. Because if you think of active, like the most extreme active strategy you could think of would, say, be trading every single stock, or not every single stock, but trading stocks every minute of the day as quickly as you can. And
I mean, high frequency trading, or like a hedge fund trading. Sure. Yeah.
And whereas passive investing, I think the truest passive investment would be a buy and hold of every single stock in the universe, which we don't have. We don't have that strategy. So every index fund, especially even the S&P 500, you have to keep in mind that's not a say full passive in the sense that's on the full end of that spectrum. It's pretty passive, but it is also US focused. It is also only large cap companies. And those are active bets to a degree. It's not to say it's a bad strategy, but it is to say that you have to reconcile that a little bit and say, if I want to be a passive investor, what does that mean? Does that mean I do large cap? There's arguments that large cap works because it does reflect the company's impact on the market. But on the other hand, maybe another person defines passive investing as equal weighted and more small cap companies. So there's no simple answer to it. But I always viewed it.
It's almost impossible to be a real passive investor unless you.
Yeah, exactly. And it's not to say that there's like lesser forms of passive investing. I think so long as you are aware of the tilts you're putting on the passive approach, I think anyone who buys the S&P 500 needs to be aware of things like the market cap weighted concentration that we currently have and things like that. And the fact that it's primarily US stocks. Well, only US stocks, but with international operations. So things to be aware of, I guess.
Yeah, Ferrero Simone says the closest thing is that is an all-country world index fund. Well, I would add ACWI EMI index fund, investable market index. Plus, you should add some frontier markets, which is hard to invest on. But also that one, I mean, it requires accepting that US is like 60% of the market. And there is a growing concern among in my community that, hey, US is overweighted. And every analysis, even Vanguard recently, had their 10 years prediction, and US stocks are predicted to grow less than international stocks on their side. So do you think that going market cap weighted should be the default solution for everybody, or do you think, like, I can tell you a couple of thoughts I had. Like, geography is in my opinion a convention we had. So what if the US will split into the 50 states? Then there's no single country that has more than 30%, maybe California, I don't know. Or Google is a global company. So, I mean, if Google moved to Singapore and say, okay, now I'm putting my headquarters in Singapore, then what happens? You had Singapore, which weights, if many, so global companies are like a global position. Their domicile doesn't matter much.
Right.
What's your take on that?
I agree to an extent, in the sense that I don't think where a country is headquartered necessarily matters in the sense of economic growth exposure. So Google, like you mentioned, has international exposure. Apple, Microsoft, very well internationally diversified. Sort of where I would put the caveat is from a valuation standpoint. So the companies themselves, from a fundamental standpoint, are internationally diversified. The only issue I see, and I think the reason why a lot of banks are forecasting sort of slower US growth, is because the US stock market is has the most stretched valuations out of most international markets.
Sure.
So from a valuation or pricing standpoint, there's that argument that, well, the US market is so popular, there's so many people buying into it, that we've seen the price increase for these positions. Average
price to earning rate is 35. So.
Exactly. Yeah. So we've seen that expand, and that's not necessarily reflected in other markets. To add my own personal bias to it, that's one area where I like to be more of an active investor, is on the valuation side, because I think, I'm hesitant to say anything along the lines I wouldn't buy the S&P 500. Sure. I like being able to pick and choose the components that I like based on things like valuation. I think I have a bit of a value tilt. I wouldn't say I'm not a growth investor, but
value, okay.
Or yeah, quality.
I'm a huge fan of quality factor at the moment. Do you do some factor investing or
not primarily? No, I know that's PWL would be the main contender for that area, but no, it's primarily fundamental, sort of like quality, in the sense of, well, to an extent, it's qualitative research of the company's branding, their quality of product, things like that. where we do quantify wherever we can, but some of it is really just, is it a good product? Is it is it better than competitor products? And trying to do so for as objectively as possible. When you get into things
isn't it priced in? I mean, of course, if it's a better product than competitors, probably that's already Warren Buffett already knows, or I don't know.
Yeah, I think that's to an extent. I think it's priced in. So if you want to talk about efficient market hypothesis, like I think most people, I think it's hard to deny that the markets are broadly speaking efficient, or broadly speaking, most people would agree that they're efficient. I think we do see periods of time where we have breaks in that efficiency, and that's not to say that that makes the investor or gives the investor. Yeah, exactly. There's still that level of difficulty to exploit that, but I do think you have periods of time where GameStop is the one I would highlight as an easy example, where the price deviates from the fundamentals, and I think that's still to an extent. The price is still well above where it was before the markets took off in early 2021.
Yeah. Sure. I remember that time, but it's still like it's when Charlie Munger, what Charlie Munger said about Elon Musk. I mean, you never underestimate a person who overestimate themselves. So if you are in a short squeeze, you never know how to behave. I mean, it's going crazy.
And I mean, the
price doesn't make sense, but you don't short it.
Exactly. Yeah, I don't short any position for that. I think there's just too much risk with shorting compared to going long.
Sure. You can express you can express bearish behavior on other ways, like buying puts or not.
Yeah, but generally speaking, I think there are opportunities that come up occasionally where that's kind of the battle is. I don't think the opportunities are always there, and I think they're fleeting. I think they're difficult to exploit. So it's not to say that active management will always win because markets aren't always efficient, but it is to say that there are periods of time where things deviate. And I think that's one of the arguments behind the US side of it, is that stretched US valuations to an extent reflect future expectations around artificial intelligence and the growth there, but they're also stretched. The expectations are stretched in some areas. It's not to say that, that's really what it comes down to is there's a stretch valuation when you have other companies who might be doing obviously not the same level of stuff as Google or Microsoft in terms of scale, but similar industries in other countries do trade at a cheaper valuation.
But can you afford the luxury of trying to exploit this when you don't work for your fund, but you had to manage people's money? How do you? I mean, if you were managing a fund, I would say, okay, your job is like analyze this and try to beat that. But if you're managing the retirement portfolio of a guy, do you take this kind of risk to try to get some alpha, or it doesn't?
Yeah, I mean, like on our end, we're not taking that much risk in the sense that like we don't short anything, so there's none of that
sure
leverage risk on that side. We don't leverage returns. Really, our viewpoint is we're very old fashioned in the sense of investing in companies that we like, investing in companies that we believe are going to stick around through times of turmoil. So we look at things like their debt covenants, their term to maturity for the debt agreements they have, and try to get a good idea of what the risk profile they have is. And from there, then
that's the definition of quality factor, which is usually not cheap.
Yeah, well, that's it. No, and it does matter. You have to look at all of the moving parts for sure. So yeah, I think the caveat to everything I've said is just because US markets are expensive doesn't mean they're not still going to do well. So none of this is to say that I think the S&P 500 is going to underperform.
Sure.
But it is really a more nuanced take where I like to pick and choose components of different indices. I like to pick the companies that I like, and I like to understand them so that I know that if there's a time of turmoil, I can ignore the market, look at the company and say, what's the fundamental business? Is that affected by this? If not, then I'm not as concerned. So when it comes to risking client money, risk is really something we're hyper focused on because that's kind of the biggest thing most clients are honestly worried about. You'd be surprised how many larger clients don't really care about growth and care more about conserving the money they already have.
Yeah, exactly. That's why probably an approach a la hedge fund is more favorable for. I mean, how to. I recently read like publicly on my channel a couple of articles by Meb Faber. I don't know if you know him.
Yes.
There is like the get rich portfolio and the stay rich portfolio, and then I kind of was a bit stunned to discover that many very wealthy people, which should not come as a surprise, they care more of not losing money than to earn money. So you get those like huge portfolios, like all bond based. You say, why wouldn't they go with the return of the S&P 500? Okay, it's way better to limit your max drawdown than to expose yourself to
I mean, a
growth.
lot of them, like especially the really wealthy clients, like they've already gotten a lot of the money they'll ever need. So it's about preserving that. And that's not to say you can, like, we don't say put them all into bonds and call it a day.
Sure.
But when we analyze equities and stocks, we look for companies that we think are low risk based on their operations, based on their debts, things like that. We consider things like valuation, because valuation is risk too. Even buying a safe company, if its valuation is too high, that's still a risk. If safety goes down and there's a contraction.
I still remember your several videos about Tesla. I remember. You were like pointing. Well, if it keeps growing as expected, in 10 years it will be worth the same. So
well, that's it. I think I got a lot of people who really painted me as a Tesla. I didn't think Tesla was going to make it.
But it was like 160 price to earning ratio. Sure, it was the concept.
And I think I haven't owned a Tesla, but I think there's a lot of demand for them. I think they do well. I think the
it's an amazing
generally
company.
has good demand. But at a certain point, there's a price where it's not worth it. If I had $1 million, you would say, hey, that's great. I'd love to have $1 million. But if I said, well, I'll give it to you for $2 million, you would say, well, that's overpriced. So it's kind of that same argument where it's not to say the thing itself is bad. It's just to say that there's a price point at which you're taking on a lot of risk. Now, it's not to pretend that I can predict where Tesla will go, but that is the risk when you pay too high of a valuation, is you really need the company to meet and grow even past expectations to see much growth past that point. So from a probability standpoint,
I mean, this is Warren Buffett approach, Benjamin Graham. It's like the classic, but how did you, how do you make sense of the current markets where like momentum is more? I mean, it's not a value era, this one, since like 20 years. I don't know.
Yeah, the last couple of decades. Yeah. So yeah, it's I think a lot of it, and we're going to find out for sure, but I do think a lot of it was tied to financial policy, right? Where when you have
low interest
rates, that plays a big role when it comes to growth rates. When you have a low cost of capital, you have to remember that all the investors who owned bonds, who owned other fixed income investments, even banks in some cases, they now need to find other riskier opportunities to put that money to earn a higher return. So when you have a very low rate environment, the riskier investments, growthier investments tend to do better, because all this typically conservative money, well, if they want to beat inflation, they have to take on a bit more risk. They can't just park it into a bank account and earn 5%. I don't know what the rates are in Italy, but in Canada now, there are 5% interest.
I'm in Switzerland actually, and it was negative. So they were asking you, hey, any money above 100,000 Swiss francs, your interest rate is minus 0.75.
Right. So, well, that's it. And so that's an incentive for you to put your money elsewhere, because you now need to, if you want to beat inflation and if you want to not pay a negative or earn a negative interest rate, you need to find a riskier opportunity to earn some return. And so I think now that we've seen rates increase, what will really matter is where they end up settling. I think we've had we have a period of higher rates where I think growth companies are really trying to hold on, because there's still this perception that rates will be cut. They will come back down. They have to, because we have so much debt. But it really depends. I don't know if rates will come down as far as people expect. Maybe they will, maybe they won't. But that will matter, I think, in terms of determining what companies do well from that point moving forward. If we establish a 4%, speaking in US terms, a 4% base interest
Target,
rate,
sure.
that's going to be a lot more aggressive than people expect. And I think that's when you're going to see value companies possibly do better, is when you have those higher costs of capital, because you're going to see a lot of money pulled out of the growthier opportunities that were achieving that massive growth off of really cheap debt.
Yeah. Totally agree. It's still annoying to see people on Wall Street bet beating Warren Buffett every other day. But,
I mean, there'll always be people who, you have to distinguish between good results, good research and good outcomes, right? Good decisions and good outcomes is the best way to
yeah, sure. Of
you
course.
can make a bad decision and still have a good outcome. You could bet your life savings at a roulette table on black and then walk away with twice as much money. It doesn't mean that it was a good decision. So when it comes to Wall Street bets and certain investments,
Sure.
Yeah.
The problem is that in this in the markets you can be wrong for a lot of time. Like if you go play the casino, I mean you can get lucky one night, but then you go the second time and then you're done. Essentially, here you can be wrong but lucky for a lot of time. Talking to you Bitcoiners, but anyway.
Yeah.
Oh, it's 15 years. It's growing all the time. Yeah. Okay. I know you don't have much time left, so I'll ask you a couple of more questions.
Sure.
And then I wanted to touch some topic on the asset allocation and strategy. Let's try to check a few quick questions.
Sure.
Home bias. What's your opinion on home bias? I mean, I've read the recent paper of Scott Sederburg. Everybody's talking about on going 100% stock. So I might also ask you what do you think about the lifestyle, the life cycle strategy, like glide path versus 100% stocks. And then there's also the home bias that pops up recently. So it makes sense to be a home bias a bit.
Yeah, I mean, it really depends on whether you're taking the passive or the active approach to investing. I think if you're a passive investor, the most passive strategy you'll get is having, again, that international diversification, with the exception of that home bias benefit you might get from a tax standpoint or those sorts of things to consider, because that does matter. It is more expensive to invest internationally than it is domestically. So that does play a role. From an active standpoint, there's also the consideration when you talk about circle of competence, which is a very, again, Warren Buffett, Graham sort of approach. But in terms of circle of competence, home bias does give a bit of a benefit in the sense that you have a better understanding of the legal framework, the regulatory framework, the bodies involved, the markets of your own country than you typically do of other countries. So from a research standpoint, it's something to consider in the sense of understanding the realm better. It's not to say that
does it really matter that I, as an investor, understand the realm better?
Well, I think it understands from like a regulatory standpoint. So just to take an example, renewable electricity is one where the regulatory framework really matters for how a company will perform. Renewable companies on their own are not extremely profitable right now, and they rely heavily on government subsidies. So that's not to say that someone from Switzerland can't study an American company and really understand it. But I do think it gives someone in Switzerland a bit of home bias advantage if they understand the Swiss regulation around renewable companies better, to focus on that area. So just as an example, France and the Netherlands are a really popular area for renewable companies because of the favorable regulations there.
Wind regulation, yeah, sure.
When it comes to wind and that sort of stuff.
Sure.
So I think from a research standpoint, it can help a little bit. But I think, primarily from a home bias standpoint, it really does come down primarily to that tax side of it, is I think going to be a much bigger factor. A lot of countries encourage their citizens to invest in their domestic markets, and usually you'll have a excuse me, a tax benefit for doing that, and that can be a sizable benefit, so it's worth considering.
Yeah, at least pension funds, for sure, they have some regulation, even in Switzerland. I assume also in Italy. I mean, I'm Italian, but I live in Switzerland since
right.
2012, so I don't know where Italy is going, actually.
Right.
Yeah, there are new things I discovered, like new taxes that didn't exist when I was in Italy. So.
Oh, interesting. Okay. Wow. Lots of changes.
Yeah, I just discovered they have like a stamp duty on every investment. It's like 0.2% of your investment amount. So it's like a wealth tax then behind the stamp duty. That didn't exist when I was in Italy.
Wow.
I will ask you another couple of questions, and I'll let you go. Davide Merrone wanted to know, it's a huge support of the channel. What's your opinion on currency hedging? Does it make sense? Does it make sense for stocks, for bonds? What's your take on that?
It matters when the currencies are more volatile, for sure. I think when you have a situation where the risk of a currency, say, falling 50%, when that's a possibility, that definitely matters more. My own approach, especially as a Canadian, because we have a lot of U.S. Exposure, as many people do, and our currencies are pretty closely tied. It's something that I take a very balanced view of, where sometimes I do it, sometimes I don't. So I can't speak to other currencies where there's more of that volatility, but from a Canadian US dollar, there's typically this $1.30 range on either side that they've always traded within, with the US typically having a stronger dollar. We've beaten them a couple times, but few and far between. So because it's more range bound, I typically won't use it, only because it sometimes adds a higher expense. When there's an opportunity to do it without a higher expense, I think, why not?
What's the actual cost?
Table.
I mean, I've tried to get a better idea around it. I also contacted many friends who are in the business. It's hard to understand what's the actual cost of hedging.
Well,
it's really hard.
So primarily from an ETF standpoint, you can compare ETFs with and without it. At least here in Canada, we'll have versions of an ETF with and without it.
Sure.
Just off the top of my head, it's only often a few basis points, up to 10 basis points of cost, where it will be that much more expensive for the currency hedging. So
you mean the total expense ratio is almost similar, but that's not the actual cost. The actual cost is like the cost of
there might be a cost baked
contracts
into it. Yeah. So that's the MER increased cost. Sometimes there will be other costs baked into it, which you have to be careful with. Now that's a bit harder to determine when it comes to swap negotiation contracts. Like I wouldn't actually have much expertise on that. For me, I'll typically go off the MER in terms of whether it's close enough if I want to use an ETF. But like even in Canada, we have CDRs or deposit receipts for American stocks to trade on Canadian exchanges. So it lets you buy Tesla in Canadian dollars.
Okay.
In those instances, only because of the layer of legal complexity, I'll typically avoid them. But again, I also have the advantage of having a relatively range-bound pair.
Sure.
US
and it's probably even less liquid. So sometimes you end up paying a huge spread when you negotiate in a liquid market.
Yeah, exactly. Yeah. So that's something to consider for sure.
Okay. Last question.
Sure.
What's your take on leverage? On like sensible leverage. I'm not talking about YOLO leverage, 10x or something.
Right.
I had this idea that I'm trying to make sense of it, that it should make sense to be a bit more exposed to returns during when you have less money. Because I think that your financial success in life is way too much based on the last year of working before retirement, because then if the market drops, you lose a lot, while in the first 10 years of your accumulation phase, it doesn't matter because you have no money. How to even out the the exposure to markets. So
yeah, that's a good question.
Do you have any?
I don't know if I'd say I'm an expert on the topic. Typically, my own sort of management approach is to avoid leverage. I think there are instances where it can make sense. But, you know, typically from my own standpoint, I'll take a risk-based view where you have to consider all the factors in terms of how much money they have, their age, their time horizon, things like that. So yes, a younger person might have a longer time horizon ahead of them, but they also have less money that they're able to bet and leverage with. And I think the one risk you'd have to be careful with is if the leverage is actual debt, having the risk of, say, putting them into a debt cycle of, you know, once your net worth becomes negative, it can be tough to claw yourself out after interest rates and things like that. So it's a tricky subject area. I think so because of that, I'll typically take the approach of someone's risk tolerance and their ability to leverage, where if someone is wealthier and has more money, you know, to your point, it is kind of the problem. But that's why that you'll see people with more money take on that leverage, is because they have more of that flexibility and that risk tolerance, where if they do take a hit, they can absorb it. They can afford to absorb it. I'd be hesitant with someone with less capital, even though you make a good point about being younger and having more time to make it up. You know, you do have time horizon as one of your risk sort of factors, but my hesitation would be on the
there are products
entering debt.
For example, here Giovanni is asking the thought of the 90-60 portfolio. There is like there's also a product that we don't want. I mean, of course, I'm not asking about specific products. There is a philosophy like going 60-40, leverage 1.5, which is according to some study, you get almost the same return of 100% stocks, but way lower volatility, so better Sharpe ratio or something like this. It's some way to integrate leverage.
I think, like I said, I'm not a full expert on the topic of comparing the strategies. I think there is a lot of interesting work in that area, and you know, even in university, there was discussion of the leverage portfolio and how it might be more optimal for investors. So there's certainly a discussion there that I wouldn't be fully informed on, so I wouldn't want to pretend myself an expert. But it is because of the risk of it, I tend to avoid it.
Okay.
Yeah, sorry, I won't be as helpful on that last question.
Yeah, sure. Thank you so much. Thank you so much for having joined me on my channel. For the audience, I will stay a few minutes more, so we will now say bye to Richard, and then I will discuss with you, because there is a lot of questions unanswered, but I wanted to at least cover part of my plan. So thank you again, Richard. So if people want to follow you, we have the main entry point is the channel, the Plain Bagel.
Thank you.
Pretty simple. And have fun. Watch his video. As you can see, I watch like most of them.
Oh, I'm honored. Thank you so much. And thank you for having me. This was a lot of fun. Thank you for having me.
Yeah. Okay. In future, next time we will react to TikTok financials together.
Sounds good. Okay. All right. Thank you very much.
Have a nice evening. Bye. Bye. Okay, ragazzi. Okay, guys. I don't know if there's still somebody here in English. I also saw Tom Personal Finance. Where are you? Hi, Tom. I don't know if you're still around, but I love your channel. Anyway, torniamo a parlare italiano. Ragazzi. Ciao. Purtroppo è stato una piccola incomprensione. Abbiamo avuto un problema perché fino a poco fa Richard, cioè il problema è che siamo in quelle 3 settimane in cui loro sono già in fuso orario, loro sono già con, come sì, posso dirlo, loro sono già, come cazzo si chiama? Con l'ora legale, e noi non ancora, quindi lui pensava fosse prima la call, per cui non aveva tantissimo tempo dopo, quindi ho dovuto un po' accelerare, e mi spiace se non sono riuscito a seguire domande. Ma no, ma poveraccio, poveraccio. Beh, Simone mi ha aiutato a organizzare questa call, per cui grazie Simone. Però niente, purtroppo è che allora è entrata l'ora legale e lui, in teoria Richard pensava di iniziare un'ora prima e aveva preso già impegno, dovuto correre. Mi spiace. Spero... Oh, thank you, thank you. My English is degrading. I don't speak English much, so the quality of my spoken English is like going to shit. By the way, questo non è l'ultimo canadese, ragazzi. Stiamo in contatto con altri canadesi. Io amo il Canada, Dopo aver fatto Ben Felix, dopo Cameron Passmore, The Plain Bagel, ne ho altri 3 nel mirino. Cioè, voglio fare il RIP Canada Tour. E non vi dico chi sono. Vabbè, dai, qualcuno è prevedibile. Non vi dico chi sono. Li voglio tutti, tutto il Canada voglio. Grazie. Ma tu sei Joe. Giovanni, tu sei Joe nel RIP Club? Oppure no? Grazie Peru, grazie. In realtà mi spiace, sono andato un po' di corsa, sono un po' frustrato, però alla fine è bello, fa piacere, è uno dei personaggi che seguo da tantissimo tempo. Forse domani facciamo un po' di reaction a un paio di video suoi che volevo comunque portare in live. Altri canadesi? XQC? No. Sono tutti canadesi, non lo so, è successo, sto scoprendo che amo il Canada. Justin Bieber, ovviamente. Facciamo un raduno a Toronto, dai, Rip Club Toronto. Vai, tranquillo. Non fare il modesto. No, dai, stasera non mi venivano le parole. Cazzo, stavo in imbarazzo, non mi venivano le parole. Sei tu? Sei Joe? Ok. Io so Toronto romano. Ho visto... Grazie, Mikatr. Ho visto gente che chiedeva, guarda la chat, segui la chat, c'erano belle domande, vediamo un po' quelle che avevamo anche stellato. Vediamo un po' questa. Non sono riuscito a farla, mi spiace ragazzi. Mi spiace che avevamo messo delle stelline ma non sono riuscito. Anzi, in teoria, dal menu che avevo previsto volevo anche andare a parlare di fake guru, di scammer, volevo portarlo a parlare anche con la Padron Coffeezilla. E vabbè, è andata così, è andata bene. Addirittura, grazie. Drake, ma chi sono queste persone? Io non conosco queste persone, cioè io conosco, cioè i miei canadesi preferiti sono ovviamente Chris Hadfield, cioè io voglio portare l'astronauta Chris Hadfield, vecchio Commander Chris Hadfield della Canadian Space Agency, cioè chi Drake, XQC, ma chi si strancula? Voglio portare Chris Hadfield, voglio portare sul canale Shane Parrish, Farnham Street, e poi voglio portare sul canale un altro canadese che non vi dirò mai. È canadese Jim Carrey? È canadese Jim Carrey? Sai che sì, non me lo ricordavo. Un resoconto dei primi Meteor Heroes è strano perché mi frustra, cioè per tornare sulla live di oggi pomeriggio, mi frustra non prendermi il tempo giusto per dare il meglio di me stesso. Salto da un progetto all'altro, cioè in 2 settimane ho intervistato 2 persone che per me sono persone super interessanti, ma ho dovuto fare un altro miliardo di cose in mezzo, cioè non sono riuscito a prepararmi per bene. Poi mi spiace. Sarà una scusa per invitarlo. No, vabbè, Hadfield è un mio sogno, d'altronde entrambi condividiamo il fatto che siamo stati al Rational Reminder Podcast, per cui potrebbe anche concedermi... ma chi è? Ma non so manco chi è, so che è uno streamer, no? Ok, Jim Carrey, ok, bene, perfetto, challenge accepted. Con alcuni sì, con Richard non è successo, ci siamo visti 20 minuti prima della live per presentarci, per introdurci, con i ragazzi, con Ben e Cameron è successo, abbiamo anche fatto un paio di call al di fuori. Una volta mi hanno chiesto una sorta di consulenza, non pagata ovviamente, su come possono crescere come content creator. A me hanno chiesto, cioè Ben Felix mi ha chiesto: Giorgio, in che modo pensi che possiamo crescere? Ben Felix, a me, ma io che cazzo ne so, scusi. Oh, pelle d'oca, e ti vedo Alfredo che sei bello boomer come me. Pelle d'oca, io con Brian Adams ho preso la patente, ci ho preso Summer, Summer of 65. Con Brian Adams, cavolo, secondo How I Met Your Mother, com'è che si chiamava lei di How I Met Your Mother? Che Brian Adams era il Bruce Springsteen canadese, se la guardavano. Come cazzo si chiamava la ragazza di... uh, uh-huh. Uh-huh, uh-huh, uh-huh. Bravo Guido, bravo Guido. RIP, un parere sui consulenti Fineco, una sorta di indipendenti. Questo potrebbe non essere male come cosa, che sarebbe così del botto senza senso. Non sarebbe male. Un parere, consulente Fineco, in realtà mi stai chiedendo un parere su tutta una categoria che contiene all'interno persone molto diverse. C'è del molto marcio, ma c'è anche qualche persona super in gamba. Ho incontrato, quando era? L'altro ieri, non ricordo più, un ragazzo che vorrei portare in live, che è giga interessante, giga preparato e che è essenzialmente un indipendente che lavora dentro una di queste sim qui e che a mio avviso è un altro livello, cioè proprio c'è di tutto, c'è di tutto. No, non sono attrezzato per giochi, per streamare, per giocare, dai, però... Adesso le stock option programmata per martedì è stata fatta? No, non è stata fatta, John Rocky, non è stata ancora fatta. È un po' una maledizione, continuo a rinviarla e non avvedrà neanche settimana prossima. Settimana prossima vi dico che mi prendo una settimana di pausa, tranne per giovedì sera, che facciamo i soldi degli altri, con il buon Guido e Paolo Coletti. Magari la settimana dopo, però la settimana prossima mi prendo un po' una pausa, ne ho bisogno, però è saltata, prima o poi arriverà. A palla sempre in macchina, che Brian Adams, sì, mamma mia che bello. Ci sarebbe anche Jordan Peterson come canadese. Mm. Mm. Robin Scherbarsky, sì, vero, ok, sì. Robin, sì. 71, tanta roba. Stoccotto. Agostino Ricotta è canadese? È canadese? Sometimes may be shit, sometimes may be good. Oh, ma a quest'ora mi chiedi questa domanda. Che vuoi che ti rispondo? Può aver senso, dipende da un miliardo di parametri. Ciao ragazzi, sto meetup ad aprile, quindi starò a Milano una decina di giorni ad aprile. Quindi magari si fa. Io mi sono già preso troppi impegni per Milano, ragazzi. Devo organizzare una serata board games a casa di miei amici. Uno mi ha invitato a fare una grigliata. C'è chi mi ha invitato, parteciperò a un hackathon. Cioè, voglio morire. A Milano ad aprile, 10 giorni, non dormo mai. Conta che tutto il giorno io sto registrando cose per 8 ore al giorno parlando, e invece poi di riposarmi e dormire, se ne andiamo al pub la sera. C'ho 50 anni io, eh. Arriverà. Ok. Che se dovessi holy shit. Mi chiedete a quale figlia voglio più bene? Uh, se non libero di opzioni. Ok, non conosco. Che devo rispondere? Devo scegliere tra Bruno e gli altri. Ma in che senso? Se devo scegliere cosa? Se giovedì prossimo fare uno dei due contenuti e basta? O se dover distruggere un formato? Qual è la domanda? Mi rendo conto che è tanto che non introduco novità. che è un po' brutta come cosa. Per un periodo sono stato molto accusato anche dai miei franchi tiratori. Minchia, ogni giorno lancio un formato nuovo, stabilizza un po' le cose. Poi mi sono un po' troppo shyizzato e faccio le stesse cose sempre, e quindi un po' di voglia di innovare ce l'ho. Ah, vediamo. Adesso mi piglio un po' di... Poi anche quando starò a Milano non farò live, qualche IRL, quindi un po' ci aspettiamo che nelle prossime mese e mezzo sarò un po' meno presente, tra seconda metà di marzo e tutto aprile sarò un po' meno presente, qualche settimana salterà e penserò alle innovazioni da fare, penserò alle innovazioni da fare. E si fa, Pero, si fa. Penso di averlo però anche analizzato questo ETF l'ho analizzato, credo, in un ETF Fight. Tra l'altro l'ETF Fight è tanto che non lo so, ho 1000 ETF da discutere. Penso che domani in qualche modo faremo anche un po' di contenuti leggeri, ma anche cazzoni. La grigliata IRL. Sì, uno mi ha invitato, devo rispondere a delle mail, che ho tante mail a cui devo rispondere. Però c'è un tizio che mi ha scritto, dove sta? Gli devo rispondere. È una bella idea, mi ha invitato a cena a casa sua, a fare una grigliata con altre persone. Speriamo che non sono io il maiale sulla griglia. Vediamo un po' domande che non ho voglia di rispondere. Van Laurent. Ho comprato delle stocks e le comprerò a piccola quantità, 500 al mese. Bravo. Danno dividendi. Mannaggia le tasse. È un po' una rogna i dividendi così piccoli, purtroppo credo, non lo so in Italia, non so se c'è una cifra, non so se c'è una questione di quantità, se c'è una cifra sotto la quale non rompe i coglioni o di farlo anche per €1, non lo so, non lo so. Era Coletti, la grigliata era una serata con Excel. Ah, era una trabocchetto, si è fatto una mail finta. Si è fatta una mail finta. Ci starebbe, ci starebbe. Ci starebbe. Buon ragazzi, ma tu giochi Simone a Sauerbraten? Ma io ragazzi ho una nuova fissa, ho una nuova fissa. Cioè io sto tornando a un gioco che giocavo 500 anni fa, quando ero ragazzino, e si chiama Heroes of Might and Magic 3, non so come lo conosce. E sto ogni tanto, non neanche tanto, ma sto ogni tanto giocandoci. Ci sto giocando. Sei fortissimo. Ok, ok. Aia, 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 aia. No, ne ho già fatti, ragazzi. Ho più di 2 milioni. Basta. Soldi ne ho fatti. Diciamo stop ai soldi, ne ho abbastanza. Non mi servono. Mi serve il tempo e mi serve il mindset per godermelo. E babysitter. Mhm. Ah, cioè, come no? Figurati, devi fare options YOLO, ti do una stock a sentimento. Vai così arrivano, mi- mi vengono a prendere la polizia direttamente qua. Ragazzi, buonanotte. Si è fatta una certa, sono molto stanco. Attenzione. Esatto, esatto. Cioè, perché? Perché il 4 fa cagare, il 5 è una merda, il 3 è perfetto. E ho scoperto da qualche mese che c'è una community che lo tiene ancora vivo e l'ha moddato a cannone, ci sono dei mod, ci sta Wake of God, che è una roba mostruosa, e Horn of the Abyss, Hota, che è un mod con un po' di cose fighe, ma tipo Wake of God è una roba enorme, ci sono dei mod in tantissime mappe, capolavoro, cioè io passerei il resto della vita a far streamare Heroes of Might and Magic 3, tutta la vita, bellissimo. Bene, ragazzi, buonanotte e ci vediamo domani a live un po' più leggera, però farò reaction sicuramente a Veritasium, ho un altro po' di cose divertenti da farvi vedere e via, vediamo un po' che succede. Ok? Ottimo, ottimo, è un bel passo in avanti. Dai, con Heroes of Might and Magic. A domani, ciao ragazzi, buonanotte, ciao.